So you've got some extra cash and you've decided that watching companies grow in value is the way to go. And that's great because most people get wealthy by investing in stocks. However, you are unsure where to begin and you are worrying that you might lose money because you are unsure of how to begin doing your own research. If this is your first time investing in stocks, then this is the perfect video for you because in this video, we're going to talk about how you can invest in stocks even if you're a total beginner. This video is not meant to cover everything but act as a heads up for you so you can know how you should proceed with investing your money. But before we begin, FinHub is a platform where we talk about everything related to personal finance. We generally talk about things that will help you understand your money better and help you to make better financial decisions. So if you like our content, please make sure to subscribe to our YouTube channel, follow us on social media, and drop us some comments if you like what you see. We love feedback from you. And now let's get back to the video. The idea of investing in stocks is to buy low and sell high so you can make a profit. Well, everyone knows this. But it is very hard to determine if the value of a company's stock is undervalued or overvalued. So if you still intend to make it in stock investing, please keep watching this video. First, you should determine the market that you want to invest in. Will you be going for the highly volatile tech startups in Silicon Valley, or will you be going for dividend stocks that are stable, that are also available locally in Malaysia? There is no right or wrong when it comes to picking a market. You should pick one that you are more familiar and interested in. Another part is to figure out your investment strategy. Investing in individual stocks can be very risky because you might be blindsided by very sudden industrial changes. It is best if you can diversify your portfolio so that the risk evens out. For example, you may own a large portion of tech company stocks and you may want to allocate some of your budget towards FMCG companies to diversify your portfolio. Of course, please take your time to research in the company that you intend to invest in. The most common way is to research on the company's finances to determine if they are profitable. A company with a high debt to equity ratio that doesn't consistently generate profit might also be a huge risk, even if they are a huge corporation. If you do not have a lot of time to conduct your own research, you might want to take a look at index funds. Indices are basically market performance trackers. Take the Standard & Poor's 500 for example. It is an index that tracks the top 500 companies in the United States. If the value of the S&P goes up, this means most companies in the index are performing well. If the index is falling in value, this means most of the 500 companies are not performing well. Indices not only track the performance of top companies in certain countries, they can also be used to track performance of certain industries. There can be an index that tracks the performance of the tech industry, the food and beverage industry, electronics. Well, you get the idea. So if you are investing in an index fund is a pool of individual stocks from the index. An index fund is designed so that it tracks the performance of the index that it is following. Index funds do not require active management and the risk is diversified. Passive management also means that there are lower fees being charged, making this the perfect investment vehicle for even beginners. If you are very new to stock investing, you should definitely study blue chip stocks. Blue chip stocks are generally companies that hold a very strong financial position consistently for many years. Blue chip stocks are also highly favored by investors because they are always making them money. You should access these companies' financial reports to better understand what are the healthy financial metrics that you should look out for when investing in individual stocks. When you study these reports, you have better insights and understanding towards the market and the industry. This helps you to benchmark the data you have against other companies that you plan to invest in. If you are investing in Malaysian stocks, it is best if you open a CDS account ahead. The CDS account helps to identify the assets that are yours. If you wish to trade any securities that are listed on Bursa Malaysia, you have to open a CDS account with the registered and authorized stockbroking companies. The fee to open a CDS account may vary, but the general fee is around 10 ringgit. Securities Board will be credited into your CDS account, and likewise, the securities that are sold will be debited into your account as well. If you are looking for a company to invest in, then here's a trick for you to figure that out. The trick is to start thinking about the products that you are using. For example, you may be using a pair of Sony headphones. Chances are you saw the value of those headphones before you bought them. Once you've studied the company in more detail, you can then determine if their future is worth investing in your opinion. Do understand that stock investing is not meant to make you rich overnight. There is no shortcut when it comes to investing. You need hours, days, or weeks of research before you can fully understand whether or not a company is undervalued. You will also have to understand certain metrics that help you determine if the company is in a strong financial position or not. No matter which company or which industry you are investing, make sure you know the background and the underlying problems of that industry and the future that comes with it. Also, make sure you properly gauge the company's financial position and profitability before panic buying or panic selling. Don't just buy and sell the company's stocks just because of hype and excessive media coverage. Make sure to use your own critical thinking and personal judgment. Last but not least, if you want to invest in stocks, make sure you are ready to wait. A huge part of investing requires you to almost do nothing at all. This is a true test to your mindset, as most investors may panic sell when there is a dip or a market crash. If you've done your research and determined that the company has a bright future, don't just give it up because of small market crash. Also, you may lose a portion of your money if you actively buy and sell a company's stocks, depending on the platform. These are basically the things that you need to understand better before committing financially. If you are not ready to invest, that is okay. Take your time to do your own research, understand if the company is in a strong financial position, determine if the stock price is undervalued or overvalued before you invest your money. Make sure you understand the worth of the business and the value of the stock price, because obviously they are interrelated. Hey, before you leave this channel, I want to tell you something. We are trying to grow our FinHub YouTube channel as quickly as possible. So when we hit 1,000 subscribers, we are giving away 10 random cash prizes to our subscribers. So if you like our content, why not follow us and subscribe to our YouTube channel, and you may earn yourself a chance of winning a cash prize when we hit 1,000 subscribers. So thank you once again for watching our videos, and I hope you like it. If you have any feedback, make sure to leave a comment down below or hit us up on Instagram so we can make better content for you. Thanks for watching and good luck to you.